Moving averages. So basically, a moving average is an indicator that's available on probably all the trading platforms you can find. So on TradingView, for instance, and it's basically a line, an indicator, a line that will follow the price more or less. What I mean is that it's a moving average, so it's the average move. So basically, the closer the period, so you can have a moving average of period 10, for example. So that will take the 10 latest candles. So let's say 1, 2, 3, 4, 5, 6, 7, 8, 10. The 10 latest candles, it will take the closing price and will make an average of these 10s to make a point. Then the next one, it will take the 10 latest one, then the 10 latest one again, and that will make a line that will follow the price. So you can imagine if you take the last 5 candles and make an average, or take the last 100 candles and make an average, the price will be more or less close to the price. So what I mean by that is, if you take a moving average 5, it will probably do something like this. So go up, then understands price moving, do something like this, all right? So that will be a moving average that's quite close. Now, if you take a moving average that's further away, so like moving average 50, it will move with the price, but much later, okay? So something like that, right? So yeah, so these are moving averages. And so many traders, well, first of all, I'll show you how you get them. So you put insert an indicator here. You've got all the indicators. Type in moving averages, moving average with a G, not an F. So you've got the exponential, the normal one, the weighted, the smooth, and these you don't really use them. So basically the moving average is the normal one. The exponential is a normal moving average, but it puts emphasis on the latest prices. So it reacts closer to the price. And this one is basically smoothed, so it reacts less to the price. So these are the 3 types of moving averages. So you can see them here. MA for moving average, exponential moving average, and smoothed moving average. So what I was saying about this is, sorry, let's take only the normal one. So MA, moving average. So what can you see? Length, let's put 100 on this one. And you can see it follows the price, but quite far away. And this one, if we put 20, yes, so it follows it much closer. Okay, so I see many traders wanting to make quick profit and to learn quickly, finding an easy way. There is no easy way in trading. So what I see many people doing is, for example, taking a 50 moving average and adding a 20, and they will basically trade the crossovers. Okay, so for example here you can see moving average there, they cross to the downside. What they're going to do, cross to the downside, they're going to sell this pair, and wow, it works. Okay, so that sadly does not work. Every trader probably has tried it, even me, and yeah, so it does not work. Why? Because of course sometimes it can work, like in that instance, that would be a great short trade here as well. But what you do in that case, buy, bam, you're fucked here. Same here. Well, that's just perfect example. In sideways market, that strategy does not work. So don't rely on crossovers, even if it's like tweet one, so like a 5 and a 10 or something. Moving average crossovers do not work. It would be too simple, you can imagine. So how do I use moving averages? So I use moving averages as support and resistance once again. So I'll show you the ones I use. So the moving averages I use is the smoothed moving average, this one. Okay, so double click, so you've got 2. Smooth moving average, and I take the 50. I call it the 50 SMA. The style, put it thick and lined with breaks. No, step line, sorry. All right, and this one, the second one, sorry. Second one, orange or yellow. Input, and I put 200 on this one. So I put step line, just don't know, I prefer it, but yeah. Now what you can see with that SMA is that it acts as support and resistance. So you can see, for instance, in that uptrend, reached here, got rejected, rejected here again, rejected, rejected. Now being choppy because market is moving, then rejected again, rejected here. So you can see the power of the smooth moving average there. And basically the 200 is the same, but a bit further. So that will be if you look at this, for example, trend on the 1 hour. So you're clearly not on the right time frame to look at that move, but you want to go into details on it or something. While the 200 will act sort of the same as the 50. In that case, you could see how it acts. So honestly, I really use a lot the SMA 50 in my trading, and I've used it a lot, and it gives really good signals and is a really good tool. I use it in my conferences as well. So yeah, so basically how you verify the validity of that moving average is by checking how the price reacted to it lately. So for example, in there, if we were here, I wouldn't really use that SMA because you can see in the past it hasn't, even though it respected it here as well, again, a little bit, hasn't been really relevant. But in that case, for example, you can see 1, 2, 3. Here, I would have definitely traded that SMA for nice support. Okay, sorry. Yeah, even with the last lesson, remember Fibonacci's? Look at that. Lovely kill zone plus rejected by the SMA. Okay, so now we're getting into a bit complementing our analysis with different tools. So yeah, so that's the SMA 50. And basically, yeah, you need to, the whole thing of mastering the SMA 50 is choosing the right time frame. Because, yeah, if I'm looking at this, now I'm on the 4 hours, if I'm looking at it on the 8 hour, 8 hour, you can see hasn't touched at all. So you need to find the right time frame and when you're trading. And we can see like here, lately trading has been totally shit. To be honest, markets, you can see it's just been reacting to Trump's tweets, to all the Chinese tariffs. And so SMA would not really work because it's a flat market. But yeah, so let's try and show you some examples. So hide this. Okay, so nice support here, here again, there, nice one. So yeah, so how I use the SMA is mainly when I see the prices going like this, and now we can see it's going back up, and the SMA, so I'm going to take green even though ours is blue, the 50 SMA, let's say, is doing something like this. Well, that will be my perfect place when the price is going up. It will usually hit this, and I will look for short opportunities with, let's say, a pattern. Nice head and shoulders here to short it. Okay, so that's the main way I trade with the SMA 50, and the 200 SMA is basically the same, just tweet into a bigger time frame when you need to. So yeah, so just like basically get used to it and try and use it in your trading, and we'll see how we use it with conferences, and it's a great tool. So yeah, this is moving averages.